Hi everyone, and welcome along today's Sunday market update. I will update I will update. Sorry guys, lots going on here. I'll update my background for it reasonably soon. Look, we are changing the format of this, and we are going to have smaller groups come in from the team each week. We're going to see if we can do, and we've pushed the time around a little bit. I'm going to try and get the Sunday market update done in half an hour each week from now going forward. And we're going to have different members of the team come through each week. At this stage, the team for today was to be Ash, Alexis, Ainsley, and Lloyd. Looks like Julian's going to join us, so we'll take advantage of that. I know Ash did ask if he could go reasonably early, but I'm not sure he's going to make it because he's not in. So what I might do is I might start with Julian. Julian, macro market overview. Boy, mate.
Yeah.
Didn't like that Omicron thing, did it?
No. So look, I think that's the key theme, right? So everybody, this is what happens when something new comes to light, right? Everything gets thrown out the window. If you're thinking about the world, we can worry about inflation, we can worry about fiscal deficits, we can worry about unemployment. Nobody cares when something big happens, and this is the story of Friday, right? So we had a very quiet environment because it was Thanksgiving, so US wasn't really in, and if there were any traders, they'd have been the B team and at the big institutions, because most people would have been on holiday, and I suspect they may even extend it a day or two into this week as well too. But on the assumption they're all back on Monday, Monday's going to be our big test. So the two things I want to just draw to your attention, I'm not sure if we did this last week, but if we did, I'm repeating myself. If I didn't, then this is new. So this really down here, this index I have shows really the number of stocks that are trading above the percentage of stocks that are trading above their 50-day moving average on the S&P. And when you look at this, what's really interesting about it is as the market was rallying here going back through September, October, we actually had this overall index climbing, right? So the number of stocks trading above their 50-day moving average was growing in number and percentage. What happened and why I thought this was so interesting is that on Monday, we had the spike on Monday, Tuesday, Wednesday, then we had the big down day big down day on Friday, but the spike we had on Monday occurred within an environment whereby the number of stocks was already above their 50-day average, was already falling quite dramatically. So let's call this bearish divergence indicator, a really poor breadth. You can call it whatever you want. Okay, so the ingredients were there for a problem if something pitched up. From an analog perspective, we had the spike on Monday. We then had a couple of good days, and then of course, as soon as we broke 46.50 on Friday, the market completely fell apart. And all New York did is trade around this base area that we see here, defined by these couple of boxes. So somewhere between. Oh no! I hate this. I'm really sorry, everybody.
Julian, I am.
Now I see it.
We've got Ash, and he's got to be out in 8 minutes. Can we give a couple of minutes from you, and then we'll pop over to Ash and do 5 minutes and come back?
No, absolutely. So let's just remind everybody here, guys. Here's this index I was talking about. You can see the decline. Here's the last few days. You can of price action. You can see the S&P rising. There's your bearish momentum divergence. As soon as we broke this area here, 46.50, that's where the market began to break down. Now that took place early Asian time. The New York market just sat here and did absolutely nothing. Right now, I know it was a quiet day, but there was no buyers on Friday. That's quite interesting. So that's why Monday's open is incredibly important. I'll defer to Ash, come back and have a couple of look at other things when we get back.
Ash, are you with us, buddy?
I certainly am, yeah. How you going, guys?
Mate, we are going well. I'm going to take up as little of your time as we can. We're going to go straight to you to look at market data, and then we'll head back to Julian. Over to you, buddy.
Yeah, thanks very much. Well, I think it's quite interesting to see really what the COT data has been saying over the last few weeks and what actually ended up happening. And this is the thing. When we're looking at the COT data, what we're seeing is where the risk is. Where is the risk for these commercial traders? Where do they see the biggest problems if they were to transpire? And they saw the biggest problems on many of these markets moving to the downside with the Nasdaq. You can see that the index was at 21% last week. It's still at 21% this week. So we'd still, next week is going to be how they really feel about this, because between Tuesday and Friday of last week, that was collating new data for the next release, not this particular release. And it was Friday that we saw the big sell-off. As Jules says, lack of liquidity on Friday. I think that there was an just panic that was going on with a massive lack of liquidity, and that lack of liquidity accentuates the actual moves. So Monday is going to be fascinating when people are back at their desk. What are they likely to be doing? In accordance to this, they're still worried about the downside of the NASDAQ. And when you look at the NASDAQ, then you would say that the overextension that we have seen does make these small little things, or even potentially big things that could be happening worldwide, ever more dangerous to hold NASDAQ positions long. So if we look at the seasonality with this on the NASDAQ, it kind of gives us a slightly different view. And the seasonality did suggest that throughout November there would be this little bit of volatility, but then towards the end of November we pick up before we start to just ease off a little bit during December, and that may well end up happening. We might actually start to see a bounce come back in on Monday, kind of going into the start of December. Let the story that people were focusing on Friday unfold a little bit more, and then maybe we start to see the stock market change. I think it's a really interesting dynamic now. Some of the worries that the NASDAQ has seen and the S&P have seen have been because of interest rate hikes, and the fact that it then puts some of those stocks at a different valuation. They're going to have to get revalued, and it would potentially bring the price down. But now with this new piece of information about this new COVID wave, can the Fed raise interest rates? Can they start to taper at the same rate they were talking about with new concerns? Maybe not. And if that was to happen, if that was to end up being something that was announced, that could again change the dynamic on the stock market. What are people going to do? But we're in that discovery phase now. We're in that confused stage. What's going to go on? It kind of increases the chances of the NASDAQ potentially holding a position, particularly when we look at the seasonality, and the S&P may be doing the same as well, starting to hold into a position just into December. And then maybe we start to tail off. I mean, I'm still looking for that market, the US markets, to start coming down more towards February than now. But with things like COVID, being such a huge issue and a huge story, these emergency announcements that can happen can change everything. They can really change the terrain. But for right now, I think we're potentially looking for a little bit of a bounce and a little bit of a range in accordance to the seasonality, and in accordance to what the COT data is currently saying. S&P 39% on the 36-month, 4% big drop on the 18-month, and a 14% on the 6-month. So maybe a bit of easing back, but I don't think the big move potentially is going to come maybe for another couple of months. So I'll wrap it up there, mate, and pass it back.
Cheers, mate. Thank you very much for that. Much appreciated, Ash. Thanks for popping in. It's good to have you on the show. We will, Julian, we'll come back to you. The move on Friday, no buyers in the market, and the big names in the trading firms are on a day off, so the juniors are at the desk. So we're waiting for Monday to see what happens when the seniors come back.
Yeah, look, I'm just going to put up the hourly chart here for you guys to have a look at, right? This is the high volume area that traded in New York session on the S&P. Right, so you can see there was no bounce. All it did was just sit there at the lows of the day, and then finally in the last couple of hours it continued to trade down. Right, I think this was that pretty much was the entire trading range for the session, but you can see the high volume area was all in this area around here. I'd have a volume chart up if I could, but I can't find it temporarily, but no matter. Right, now guys, look, park that. What's really important is Monday. Right, so Monday is everything, right? So what's going to happen? Lower open and follow through, higher open, follow through, right? Everything is to do, the thing that will be the most confusing for me will be an unchanged open. I don't feel that's what's going to happen. That's the most confusing thing of all about, is where that open's going to be. A higher open, this is an opportunity for people to continue to sell. A lower open, what then happens? Does it open lower? Does it stay down and then go again? Okay, so we have a long way to go till you hit structural support in any of these equity markets, especially in the US. And when you look at not just the S&P, but the Dow is trading pretty crappy. The Russell 2000 has had a false breakout to the upside. That's now coming back. Okay, so that's the idea about stocks. When you look at other markets and what else is going on, we saw big sell-off in oil, massive sell-off in oil. Biggest session that we've had in the oil market for months and months and months, all the way back to March 20 when things were completely insane, right? We had a very high volatility. This is the same pattern. However, it's a little bit different this time. That was into a falling market. This time we did it into, yes, it's been recently a falling market, but it's been quite a bullish oil market for the last few months. So again, you've got to judge where people's positions are. And again, think about where's that open price going to be? What does it mean? What happens after the first 2 or 3 hours? And that's both in Asian time and in New York time. Guys, you've got to be, it's one of those times when you lose some sleep on Monday. Okay, lose some sleep on Monday being in front of the trading screens. Don't just put a position on and leave it hoping everything's going to be okay. Okay, so this is where it's really critical. So what's the next thing after the open? The most important thing after the open is where that market closes. If we close majorly down, then that would give us 2 strong days down. Traditionally, that tends to lead to a Tuesday bounce. Okay, so if we close up, right, we then might see a sell-off Tuesday. So there's a couple of things and pathways that can happen, right? And it's now going to be about trading breakouts of opening ranges. It's going to be about being more flexible about the way in which you're operating in the markets. And as goes the stock market, as goes then oil, as goes then cryptos, as goes then the major currency pairs too. You know, we had a huge move, a 2 big figure move in dollar yen. We had a significant bounce in the euro, which I suspect was more position covering than anything else. I think it's people closing out profitable positions because they've lost money elsewhere. So this is where this whole correlation of 1 becomes really important, right? So no position, no market is left untouched with all of this. So for those of you who are short the S&P at the moment, I would enjoy the ride. Your stop loss is new highs, guys. Let's just leave it in there and see how you get on. Maybe this time it's different. Maybe this time, to Ash's point, we could have a really bumpy beginning of December, and who knows, maybe that sell-off that Ash was looking for in February is going to get superseded by it happening now. You know, when we saw that breadth changing on the daily chart that I showed you a few minutes ago, that suggests that there's a more now to this, right? And some of the cycle analysis has it turning between now and the second week in December, right? And there's a big cycle turning point coming in that is going to be a multi-month turning point. So maybe it's now. Okay, so that's why we have to trade these things on the pure price action alone and hope that all of our background analysis has been done and we're able to have our firm view about what we're going to do and when. This is why you do homework on a Sunday night and first thing on a Monday morning is to get on top of where the market might well open, both in Asia and in New York. And again, where it closes is critical to Tuesday's price action, which is what we're going to look at as well too. Well, I won't be looking at it, but I'm sure somebody from Actions to Wealth will be looking at it, but I'll be looking at it because I'll be trading it all for the next week. I think this is one of those times when I've got to sit in front of a screen. Okay, so I hope that really helps everybody in the picture. I don't care what fundamental information is out there next week. This is all about COVID. It's all about scared people. It's all about people who have too much leverage in the market and too many positions. So what would you be doing if you were them today? What decision would you be taking if you were overgeared in the market, if you had too much money at stake, if you've made a lot and you wanted to protect, and on top of that, you're relying on the governments to save you? So there we go, guys. You make those decisions, and I'll leave it up to you. But trading is going to be fun for the next few days.
Yeah, these guys all have had a weekend to stew on those things right now about where they are, how big their positions are, whether they are at risk. They really will have had some time to stew on that before they get to work on Monday morning, and there'll be some pretty direct decisions made, I would have thought.
It's going to be an exciting week, Paul.
I look forward to that, mate. Love it when that happens. Always good to have opportunity, right? Some people seem to don't like markets when they go sideways. They don't seem to like markets when they go up and they don't go down. I'll sort that out for you in a second, Lloyd. But really, as a trader, when markets are moving, you have opportunity, and we all want opportunity, and that's what it is all about for us. Look, next we're going to go to Ainslie and talk gold. Boy, everything moved around on Friday, perhaps apart from gold, Ainslie. What's going on with that?
Interesting, isn't it?
It really is.
Poor gold. it started just after the close of the Asian session. What we looked at was, and I'll share my screen, which was always a good idea. What we had here was a move, and gold, like yen and Swissy and a few other bits and pieces, we were looking at a move and a flight to safe haven. So we saw a really nice strong push up here, up around to the 1817 area, and then as is often associated with a really strong pullout or a strong drop with the S&P or Dow or equities. Was it a case of a bit of a risk-off mode, but is it people now selling their safety, their safe haven, their assets to cover their situation with what they've got in the equity market? And I've got to say, I went back and had a look at the S&P chart, and we just have a quick look at that. I'll just open it up, and every time there is a major move in the S&P down, there'll be a correlating move down in gold as people have to sell to cover their position. So if you go back and have a look at that and correlate that back to a downward move in the S&P, you'll find a corresponding really strong downward pull in gold as well. I have a sneaking suspicion that's exactly what happened with poor old gold on Friday night. But if we look at the US dollar, and we don't often see this, Paul, and it's just bizarre, and it's a really hard one to explain. So the US dollar fell at the same time as gold fell. You don't see that often, do you?
No, so the US dollar valued at the same time that everything valued on it dropped, and that is unusual. This correlation is, you know, it's not like it's a mathematical correlation. It's not like it's an imaginary correlation or an emotional correlation. The value, when the value of what you're valuing and drops, you expect the price to go up. And when it doesn't, it does make you wonder what's going on structurally in the whole market. Yeah.
So what we've done is, and you know, we didn't exceed the previous week's lows at all. We're just in there. So whether gold bounces back up, I was looking at it from a technical point of view, and I've looked at some major moves on the Fibonacci levels. Interestingly enough, where it is sitting and it's bounced from is on the larger move here is the 50% retracement level, and the smaller move is the 618 level, which is exactly the monthly pivot. So I know I've said it once or twice before, gold likes levels, and it's come back and it's bounced from there as well. So at the moment we're sitting here, it's not quite sure what to do. It's right back to almost where it started 3 days prior. So yeah, I think we've got a situation of anything of value has been sold off, and it is being used to cover the the unfortunate situation in the equity market as a result of Omicron. Omicron? Am I saying that? Omicron, yes. So yes, that's where we're at. As you can see, who knows? It's going to be a really interesting week. But that does bring me to my next little friend.
Actually, I thought we might sneak out and do oil and then come and do Lloyd session, and then come back to it, just put a break in the middle if that's okay.
Oh, sure. Okay. Well,
just means that for my recording, there's a simpler, a clearer break if that's okay.
Okay, no problem. Well, we'll leave gold to sort itself out next week.
I do have a question for you on Ainslie. So Omicron scared the wits out of people on Friday, and fair enough too. It looks, well, I guess it depends what you're reading, as always. You know, there's always 50 different truths online. It's just one of the parts of it, but looks highly contagious, but not especially damaging from what I'm reading. It's only a little bit. I may well be missing something on that. Certainly seems to attack children, which is going to put the scary god up there. But US has closed its airports. UK has closed its airports. Israel's closed its airports. Be interesting whether that reassures the market on Monday morning, and whether we see some buying here. And if we do, what, you know, or whether the market just goes, nah, we can't have another one of these. We can't deal with another lockdown. Businesses cannot survive it, and the market just continues to move down. Either way, My impression is that the colour of the bar on Monday might give us a pretty good guide to the colour of the bar for the rest of the week. Any thoughts?
My thoughts are, as you said, they don't know a lot about this. This one at the moment, World Health Organization have come up with some very scant details to start with. I did notice that the South African health minister did say that she just doesn't understand why everybody is overreacting with shutting their borders. However, I think it's like you said, everybody just saying, oh, no, we're not going here again. Delta was enough. So, yeah, I think as more information comes to hand with this particular variant and whether because the pharmaceutical stocks all bounce, right? Because there was some of the information that came out, they're not sure how effective the vaccination is against this variant. They just don't know. So until somebody says, look, actually, it's okay, it's nowhere near as bad, I think we're going to be in a state of flux until we get some more information. We know how we all want to trade rumours.
Even if we take a direction on Monday, actual genuine information might make some pretty big differences, right? I think the sentiment will stay the same. After Monday, the sentiment will stay the same until we get actual information to change, and we'll watch that with real interest. Thanks, Angie. We'll be back for oil in a few minutes. Oil, if gold did nothing last week, that is not the case for oil. Before we have a look at oil, let's go and have a look at commodity or currency indexes. Lloyd, are you with us today?
Yep, I'm here. So let me grab the screen. Let's certainly in for a good ride on Friday. What's up with the naming? I need to read out about how they actually name it. Sort of wanted to call it variant Decepticon instead of Omicron.
Yeah, it's sorry, mate, you're just breaking up a little as you're coming in. It's a bit hard to make it out. Are you asking why they call it Omicron?
Yeah.
Because it's hard to pronounce.
Okay.
No,
right,
that's not the case. I mean, just quickly on that one, the next Greek letter is Nu after Mu, which was the one that was out of South America. Nu was too close to Mu, and they would not actually use the next Greek letter, which was Z.
Oh.
So they skipped over President Xi and went straight to Omicron. There we go.
So there's some political influence in that.
Yeah, they can't use a name that will have any cultural or name cause any kind of offence to any kind of cultures or anything like that. So Nu and Z were skipped over. There you go. I read that this morning.
Nice work. I still think it's because it's too hard to pronounce. Over to you, Lloyd. Let's look at some currency.
All right, so let's have a look at last week. What happened? Got a bash on dollar Swiss. Yeah, actually got triggered in, and then Friday whack. Same for euro dollar. Got triggered in. Friday whacked me. The good news is that I also got triggered in on Aussie dollar, and for this pair has been pretty generous to me. I think for the past 2 months, it has been giving me profits. I think I have earned about 9 or 12% in there. Yeah, so for this upcoming week ahead, I'm still going to bang on Aussie dollar, but let's look at the analysis itself. So for the dollar index, did warn you about last week that you might be hitting a potential level over here, which, well, due to the fundamentals, it did. Which I kind of like it because it's due for a pullback anyway for the dollar index. So I'm banking that price will actually pull back to $95, which is a pretty good level for the past till now. You can see that it has been bounced off this a couple of times, even pretty recent of September. Yeah. So waiting for price to actually have a bit of retracement to $95, and then we can actually load on to more positions. At least technically that's what I suggest. Now stronger than dollar will actually be the Japanese index. Yeah. So this is actually one of my favorite ways to trade. I can tell you, we have engulfing bar and then we have a test bar. So you combine both together, this will be an engulfing test bar, which is in the past this has been proven to be one of my strongest signal on a horizontal level. Yeah, so wherever this appeared, it did tell me that the underlying sentiment is going to take charge. Yeah, so we have price bouncing off at $88 over here. So you can, and then I would expect actually price to take off from here henceforth. So it seems that this level is proving to be some huge resistance for the Japanese index. So keep a look up. Same sentiments with the others. Monday will prove to be really the turning point. Yeah. So I expect to probably see some gaps, and then once it closes the gaps, I think it's all good to go. Now the Canadian index again, Friday plunging. but it's still well within this box, so I'm not going to do anything about it until it proves that it wants to break out. Now the Swiss did bounce off this level 1110 and the trend line beautifully, but it's proving to be some resistance at this level. So as such, for the upcoming week ahead, I'm not recommended to touch Swiss until there's much more clarity ahead. Now Euro price broke this level beautifully, seems to be gearing up for some retracement. Probably in the middle of the week, we might see some weakness in Euro. Yeah, but we got plenty of space for the Euro actually to cover back up to the retracement level. So again, my opinion is not to touch CAD, Swiss, and Euro. Now British Pound is interesting. Finally broke up. There's some hesitation on this level. Previous week broke up. Not a very strong breakout. Yeah, so on the upcoming week ahead, especially Monday, the whole Monday, we need to see some sort of consolidation or retracement, and then when price has a very nice lower high, then we can actually deem to jump in. Yeah, but British Pound for the upcoming week ahead is definitely a currency I wish to short. Now the Aussie index, get rid of this thing. It's still very much on a weakness run. Yeah, so now pay attention to this level whereby previously actually gapped. Now, so on Monday ahead, if there's any inclination, probably in the afternoon, that the Aussie is going to continue to weaken, then we can actually safely jump to this currency for it to actually go down to 70. There's still ample space for it to run. Now, the currency of the week ahead, I would say, is Kiwi. Broke down very, very strongly, even lower than the previous break. Yeah. So if all goes well, we should probably be able to short Kiwi in the upcoming ahead. As such, we do have the currency to go, which is Kiwi Yen. You can see that price has already started its downtrend. Very nice. Looking to actually waiting for price to actually have sort of a retracement, and then we can jump in and have a good ride down. The next currency we can jump in is actually Aussie dollar. Got to be my favorite currency for the past 2 months. Now price is obviously on a downtrend, waiting to do its classic break and retest, and then we can jump in for the fun ride ahead. From then on, this will be uncharted territory for Aussie dollar, because this level hasn't been tested for a very, very long time, since back in 2020. So should have plenty of space to go down to the last significant low. Yeah, so with that, keep a look for Kiwi and Aussie dollar. Over for me.
Lloyd, thank you very much for that. Good to have your view on these things. Always interesting to see how it's going. Aussie dollar looks bloody good, mate. Let's go back to Ainslie and have a look at oil with Ainslie. If gold didn't move last week, Ainslie, it is fair to say that oil did move and move a lot.
Friday's move on oil was its largest daily move in 10 years. So if that gives you any indication of it moved, and boy did she move. And I reckon President Biden might have been having a second serve of turkey for Thanksgiving. I think he would be very thankful indeed about a price on this price drop that he'd been asking for from OPEC privately and then quite publicly for some time, and he didn't get it. So, excuse me. By the way, this was his release where we saw a rally in prices during the week. That was after they had announced the release of the special petroleum reserves release. And what happened there was that there was this push up because what they offered to release, and it was a coordinated release with the UK and India, as well as China, South Korea, and Japan coming online at a later date. They just didn't release enough. What they were talking about releasing was a day's worth of usage, i.e. nothing. So they just sort of laughed at that, and then the OPEC nation sort of laughed and went, well, no, you're not going to strong arm us into what we're going to do. We'll be telling you what to do. However, the 3% rally wasn't really what Biden wanted. He couldn't have actually probably worked this timing through for another variant to come through, and bang, that's what happened. This, Julian touched on it, the big move last year in April where we went to zero was just before COVID really sort of took off. That was against a falling market. This is not, this has come against a bull market, and you can see we've come down straight down to the September lows. Okay, so we're sitting here on a strong level of support. Everything is happening based on rumours of this variant. As said, we really need to know where more information is coming. The fact that we've got economies already, we had some economies already starting to shut down across Europe because of the lack of vaccination and the spread of God knows which strain it was, but it wasn't the latest one. This is done on the news of the new variant and the borders being shut. So retracting economies, the lack of demand for fuel, this move obviously has got nothing to do with Biden power or anything like that. Where this goes to next will be very interesting. Obviously, a next stop is either, if it just continues on Monday or during the week, our next stop is down here to 61.84. And that is an, excuse me, that's an August low, but let's just wait and see, because it's a slightly different scenario. The thing that won't be happening in response to Biden's coordinated move to strong arm OPEC is that they have said that it will be unlikely that they'll increase their production in December. So that was before the news of the new variant. They obviously won't do that now, but they are going to keep a tighter hold on, I believe, on supply. So let's just see how this one plays out. It's they've been here before, different scenario, but there won't be any chest beating and trying to flood the market like they did last time, because that didn't go so well for them last April. So let's just see where this goes to next week. Like Julian said, it'll be a very interesting week in front of the charts, that's for sure.
Yeah, Ainslie, I think it's a fair thing to say, right? Of all of the products that we can watch this week, and there will be a lot of stuff, as Julian said, there's a lot of stuff we can watch, and it's going to be pretty interesting. But in truth, for mine, oil is the one, because oil is the one that went to, you basically couldn't give oil away during COVID. During the early stages of COVID, you couldn't give it away, while the spot prices that we deal with stayed in positives. The futures market went to negatives. It was actually, you could get negative for less than, or for less than free. And if this world looks like it's heading back to major lockdowns, if the US is going to lock down again, if the UK is going to lock down again, you can pick any random number you want to, and always possible to getting there. So all of a sudden, this market, we've been talking all year about $100 for Christmas, $100 for Christmas, $100 for Christmas. This could be 15, 20 bucks.
Yeah, and who knows? Like I said, the other thing that is happening in the background, and it'll be interesting to see how it plays out. Now, OPEC has said that they won't increase their production in December, which was meant to be on a 400,000 barrel per day basis. Okay, so they all had their quotas. What is happening at the moment in the oil industry is that there's a lot of countries who are not making spare capacity component quotas. So they are not making their quotas as it is. It's there is an issue actually with getting investment. So they're not going to be increasing just because Biden said this is quite a separate issue altogether. So the restriction with the capacity or the ability to supply oil at the moment is in the background. We've got, as you said, economy shutting down. We've got flights stopping, borders closing. We've been here before. They know that they can't have a contest between beating their chests and saying, well, you're not going to tell me what to do. There will be a far more controlled approach this time. But there are other elements happening on in the background. But yeah, let's see how we go this week. Very interesting week ahead.
Cheers, Ainslie. Thank you very much, and thank you to the team. We will have someone's asking if we can do a review on gold. I think we've already done that, so you should better look back in that and have a look. And again, there'll be some recordings of the broken up sections of this come out soon. Look, one of the things we're going to be doing between now and Christmas is having a look at doing the Sunday market analysis show in 30 minutes and having different members of the team come in each week. We feel in a way that there's just so much information, so many people. We may break them up. The people that are here this week, I think Julian will be back next week with the people that weren't here. So we'll have Orlando back, Gordon back, Geoff back, all in next week. You will see us try a few different lineups between now and Christmas as we try and get this. But I'd like to keep the Sunday market analysis show to around 30 minutes. If you've joined us today, thank you very much for joining us today. I hope you're well equipped. And look, as Julian said, maybe it's time you're going to have to miss a bit of sleep early next week. There may be some opportunity as well. I think there's a strong probability that next week we'll see some opportunities early in the week to make some pretty good money in this market if you can get it right. And the key to markets where you can make some pretty good money if you get it right is getting your stop losses in the right place and getting in control if you're on the wrong side and getting out. That's just the way you've got to trade it, because I don't think it's likely to go sideways. I think it's likely to go one way or the other pretty early in the week. We will watch with interest and see if we can make $1 or $2 from it. My thanks to Mai for looking after the event for us. My thanks to Julian, Ash, Ainslie and Lloyd for joining me today. We will see you guys. I'll be away next week. The team will be in with Geoff and I'll be back the week after. I will see you guys then. Take care. In the meantime, remember, stay calm and make good decisions. And if you do that, it'll all work out in the end. Cheers, everyone. See you later.